春天又来喽，嘿呦！春天又来喽，嘿呦！大家呀，快来起歌唱，春天呀带来新气象，春风呀吹过百花香，喜悦呀照在你脸上。快来穿起那个新衣裳，快来那个拍手掌。
Okay, and we are live on Facebook as well. So very warm welcome to everybody, and of course, wishing everybody a happy Chinese New Year. All right, so today is this is the Chinese New Year edition. Yeah, but in blue color, not in red color. Right. So yeah, let me see if I have any Mandarin orange, and hopefully I can collect some ang pao from. I think that's the trend right now, right? Okay, later I'll put on my Pay Now QR code. So y'all can bless me with some ang pao. All right, we will be starting in about 2 more minutes. Okay, 8:35 we will actually get started. I think the best ang pao will be the stock that we are going to discuss today. Okay, so from the stocks that we do, we buy and then we make money. Yeah, that would be the best 2021 Chinese New Year big ang pao. Okay, fantastic. So we will be starting in about 1 more minute. Okay, so as usual, this particular session is actually live on Facebook as well on Ultimate Investing Facebook page. So if you actually miss out any of the content or if you actually want to rewatch it, you can actually go to our Facebook group, Facebook page, Ultimate Investing, after this video, and you will be able to actually watch them live on there over there as well, the recording. So tonight's session will be all the way until about 10 p.m. Okay, all the way until about 10 p.m. So it's going to be about 90 minutes. So just to do a quick check, okay, how many of you have listened to the Fundamental Investing 3.0 before? Okay, 3.0 before. That means the one whereby we actually talk about Tesla, we talk about Palantir, we talk about Pinterest. If you have watched it before, can you just type in 111? If you have not watched the Fundamental Investing before or the 3.0 before, type 000. Okay, that's great. I think quite a number of you, most of you in fact, okay, have not attended the 3.0 before, which is actually great because for the Fundamental Investing series, what happened is that I actually repeat the modules, okay, for 2 weeks. So for the people who cannot make it this week, they will be able to watch the next one. And right now we are at 3.0, which means that I actually have a Fundamental Investing 1.0 and 2.0. So if you have not watched that as well, you can go to our Facebook page and actually go and watch them, go and find them. Because the content is actually different. So for 3.0, I think it's very, very interesting because we are going to talk a lot about growth company. We're going to talk about company that is not profitable yet, but why is it that their share price has been going higher and higher and higher and higher? And of course, what are some of the opportunities that we can capture, okay, moving forward using a new framework that we have actually created, right? So do look forward to the content for today, especially for those of you who have not yet listened. For those of you who have listened before, okay, I think it is still good to refresh again because I think the last time I did this was about 3 weeks ago before Chinese New Year, so after all the food, hopefully all the content is still in our brain. So let's get started. Okay, let's get started already. Let me just stop my Chinese New Year music. Okay, so before I start, I just want to do another sound check, okay? So if you are able to hear me loud and clear, can you just type in LC, loud and clear? All right, I know some of you are saying that there's no sound. Okay, maybe you can check on your side because based on your response, I believe that most of you are able to hear me loud and clear. All right, another thing that I'll need a favor from all of you is that later on when I actually go to this website called Morningstar, okay, do let me know if the numbers appearing over there, is it blur or is it clear? Because based on the last session that I did, okay, at the end of the session, I realized that the numbers is actually blur. All right, which means that people have been looking at the blur figures all the way. So yeah, do let me know if let's say the figures appear to be blurrish, okay, so that I can see what I can do, okay, on that particular portion. All right, and with that, I think we are all ready to get started. So let me go to my PowerPoint. Okay, and you should be looking at my screen. Okay, a bright yellow screen showing Fundamental Investing 3.0. Right, so a very quick background on what fundamental investing all about. Okay, basically we will be using the methodology, okay, from Warren Buffett, okay, and that is looking at good company and buying them at a sensible price. So that's the whole idea of fundamental investing. And once again, we are looking a lot at the company itself. Okay, we are not looking at the share price. We are looking more on the business and the fundamental of the business itself. And of course, for those of you who have joined us on the UI day itself, you should remember this particular board. All right, so this board is going to be how we are actually going to implement what we have learned. So if you look at this particular board, there's actually 4 key components. The how of the board represents fundamental investing, and that is the most basic fundamental block of the board, followed by the technical analysis, which is the sale, represented by the sale. And of course, if you want your ship to move fast, you need to have a strong engine, and that is the options. Okay, the options is there to make your ship move faster. And last but not least, okay, if you have a very, very solid boat, but imagine your boat do not have a life buoy, what happens? Okay, yeah, one day if you drop inside the water, nobody is going to save you. So that is the importance of portfolio management as well. So investment, like I said, it is not just purely on one component. Over here in Ultimate Investing, we believe that, you know, investment should be comprehensive, and that is why we actually do a combination of FA, TA, options, as well as portfolio management. But of course, today we are going to go into the fundamental itself. Okay, I'm going to dive in. But before I go to that, okay, let's play some simple game to make our brain get a little bit more active. Okay, especially right after Chinese New Year. I know we have been eating a lot. So hopefully, you know, our brain is still working at 100%. So let's play a very simple game. So the game is called Guess the Stock. So how are you going to guess the stock? Okay, very simple. Later on, I'm going to show you some pictures. And when you look at the pictures, I want you to actually share with me what company this picture represent. Okay, what is the company name? I'm going to give you the first example. This is just a trial run. Okay, so once you know the answer, just type it into the group chat. Okay, fantastic. Very easy. First one, Apple. Okay, yes, that's right. And this company is none other than AAPL, or rather Apple, APPLE. Okay, so if you are ready, let's move on to the second picture. This is pretty easy as well. Bitcoin. No, that's not the correct answer. Okay, no. This is not Bitcoin. Yes, Tershan has got the correct answer. Okay, amazing. And the answer is 10 cents. Okay, so you have 1 cent, okay, and you have 10 of them, and that is 10 cents. So some of you will be, I thought this is $10. Okay, no, this is 10 cents. Okay, so pretty easy, pretty easy so far. Okay, 10 cents. Okay, third one. What about this? This is pretty straightforward as well. Okay, yes, Sebastian got the correct answer. Disney. Okay, you have Mickey Mouse, you have Donald Duck. Okay, so the next one we have, what is this? Okay, wow, somebody have got the correct answer, and yep, the answer is AMZN. AMZN means Amazon. Okay, so why is this an Amazon? Because it represents the Amazon forest. Okay, the Amazon forest. So yes, the company name is Amazon. And last but not least, this is the second last reader for tonight, the second last reader. Anybody want to make a guess? What is this company? Pretty much the company that I chose, I think most of you will be familiar with them. Okay, yes. Okay, Matt has got the correct answer, and Kit got the correct answer as well. So the answer is actually General Motors. Okay, General Motors. So why General Motors? If you can see, this is the picture of a motor with 4 stars over there. So it's telling you that, hey, this is a General Motors. All right, I hope it's not lame enough. It's not too lame. Okay, and this is the last one. We should all be familiar with this. Okay, very, very familiar. Okay, I think about 2 weeks ago, this is one of the hottest topic in town. Okay, hottest topic in town. Yes, and the answer is GameStop. Okay, the answer is GME GameStop. And that also comes to the end of our game as well. So the game has stopped over here. All right, I hope you have some fun, keeping yourself active and of course playing a very, very simple game over here. So the first company that I just want to share with all of you over here is of course GameStop. So I just want to share with you what happened for this particular company. So you can see that this is a company that I think within a very, very short period of time, let me see, it's about a couple of months. So from $20, GameStop went all the way from $20 to $480 in a couple of months. Okay. And of course, whatever goes up fast comes down as fast as how it goes up. So from 480, it went all the way down to 65. And I believe right now it is lower than 65, somewhere in the range of 40 plus, if I never remember wrongly. Yeah. Okay, maybe I'll just do a quick check. How many of you here are still vested in GameStop one? If you are vested in GameStop, can you just type in me, M-E? Okay, again, don't worry, we are not here to judge you. Okay, I can tell you that I do hold a little bit of GameStop. Okay, so yeah, I can't type lah, but anybody else is with me. You do own a little bit of GameStop. Okay, I guess I'm the only one which is feeling a little bit FOMO over here. Okay, put option. Okay, interesting. Right, yeah, but pretty much we can see that the game has really stopped lah. All right, so let's analyze this particular company GameStop using the example that I have just shared with you, which is the boat theory. So what happened to GameStop? Basically, you can see that this is a stock that ride with a very, very strong trend. So from $20, it ride the trend all the way until $480. So you can see that the sale of this particular stock is really, really, really big. Okay, but what is missing in this particular company? Okay, as you can see overboard, is that the how is very, very small. Okay, and the how basically is telling you how strong this particular company is. So if you look at this particular picture or this particular boat over here, let me ask you this very, very simple question. Do you think this is stable or unstable? If you think it's stable, type in S. If you think it's unstable, type a U. Right, I think it's pretty straightforward, right? Okay, I think the boat over here, yes, it might be able to go for a short period of time, but the moment there's a big wave, or if you want it to actually last for, like 100 kilometers away, it might not be able to go that far, right? So in a short time, because of the trend, because of the sale, it might be able to travel a fair bit, but you know that, whenever big storms come, this boat is definitely going to capsize. Right, and previously if you look at what we have shared with you for fundamental 1.0 and 2.0, these are the 4 criteria that we are looking at. First of all, the company must be profitable, cash flow, operating cash flow must be positive, the ROE must be above 15, and of course the debt to equity must be below 0.5. So if you use this particular framework and we use it on GameStop, you will be able to see that out of 4 criteria, it only passes the one of them, which is the operating cash flow. But pretty much this company is losing money. The ROE is negative 57, which is really, really bad. And of course, the debt is 2.02, and that is 200%. Okay, the debt is double of the equity. So fundamentally, you know that it is very unstable. But today, we are going to look at something similar. All right, we are going to look at a boat that looks like this. So can you share with me what is wrong with this particular boat? Anybody is able to spot what is wrong with this boat? No fundamental. Okay, okay. No engine, yes. Other than that, no driver, no engine. Sinking. Okay, okay. Yeah, maybe my art and craft fail. Okay, that's not the purpose of this. Okay, so let me share with you what this particular boat looks like. Okay, so today we are going to explore companies that appears to be weak in fundamental, but in reality, they could be really, really strong. So if you look at this particular boat over here, you can only see a small part of the hull. Okay, which means that you can only see what is above the water, but what is under the water, you are not able to see. So, if you actually dive underwater, you might be able to see that this particular boat might have a very, very, very big and deep hull. All right, but on the surface, it looks like, hey, this boat seems to be sinking. It's not exactly that stable. But how do you? So let me ask you, how do you know whether this boat has it got a strong hull or has it got a really, really weak hull? Is there any way we can actually find out? Anyone have the answer? How can we actually find out? I think I have actually give you the answer earlier on already. So, but based on the naked eye from the top, you will not be able to see, right? So all you need to do is to dive underwater to check. Okay, you need to dive underwater, and that is where you can actually see how strong this particular boat is actually. So that is the whole purpose of what we are going to do today. Okay, so like I said today, those companies that we are analyzing today, on the surface, they appears to be not that strong. Okay, because those can be companies that are non-profitable. They could be companies that are only 3 years old. So in terms of the track record, they might not really have a very strong track record. But in order for you to know whether how strong or how weak they are, you actually have to dive deep in, okay, for you to actually find out. So that's the whole purpose of Fundamental Investing 3.0. So of course, the first example that I just want to touch on is, of course, companies that are losing money. So earlier on in Fundamental Investing 1 and Fundamental Investing 2, we always emphasize that today, if you want to invest in a company, make sure you invest in a company that is profitable. Okay, that is profitable, because end of the day, okay, I would say that it makes sense. Today, we want to invest in, if let's say today your friends say that, hey, let's say Karen, okay, can you lend me $100,000? Okay, then Karen will be like, okay, so what do you want to do with my $100,000? What am I investing in? So the friend say, oh, you are investing in 5 F&B restaurants that are all losing money. So how do you feel? You probably feel like, oh, do I really want to invest in 5 F&B outlets that are losing money? So again, fundamentally, we always want to invest in a company that is profitable, because once a company is profitable, it will be able to sustain much longer. All right, but if you look at the pictures over here, we have a few companies like Tesla, Palantir, Pinterest, CrowdStrike, Fastly, Alteryx. Okay, the problem with all these companies is that they are relatively new, and we all know that there are certain companies, companies don't actually become profitable immediately, especially nowadays. If you look at some of the biggest company out there, like for example, Uber, Grab, especially in the starting phase, they have to actually burn a lot of money. They have to throw a lot of money. Even if you look at a company that is very famous in Singapore company that is doing really, really well, and that is Sea Limited. Okay, Sea Limited, you will realize that the e-commerce portion of Sea Limited is not profitable at the current moment. Okay, because they are reinvesting a lot of the cash flow into marketing, into expanding the infrastructure, etc. So as a result, you don't really, under the net profit, this company might appear to be still negative, but doesn't mean that it is bad company. Later on, we will explore further. Right, so when you have a company that is relatively new, okay, what happened is that you want to focus on 2 main areas. Okay, the first area is, of course, we are looking for growth. So this company has got to be growing. You do not want to invest in a new company that is not growing. Okay, that is not the point that we are moving towards. So we are investing in a new company, and that is having a high growth. So maybe I just want to check with all of you this very simple question. Okay, what defines high growth? Put in your perspective of what percentage do you think would you consider a high growth company? What percentage? 15% from Nui. Okay, May put 20%. Anyone else other than 15% and 20%? More than 50%. Okay, from Yihao as well as from Paw. Teen put 25%. Okay, great. Right. So you have to understand that, the definition of growth is pretty much different from each and individual one of us. But I do agree with most of you is that I think the minimum that I see over here is 20 or 15%. Okay, 15%. And I do agree that if a company is able to grow at above 15%, 1-5, I do classify them as under a growth company. Okay, above 15%, I do classify them as a growth company. Anything below 15, probably more like a stagnant. Of course, you have negative growth as well. And of course, the next point that we want to touch on is that, okay, when a company is growing, you also want to make sure that they are expanding. Okay, that means either they are expanding to different countries or they are expanding to a wider network. So one of the issue about Singapore company is that, right, okay, most of the Singapore company, especially if you look at all the blue chips company, they have already pretty much dominate the local market. Okay, the local market. And which means that if they want to actually expand, they have to move overseas, and that is where a lot of them might be stuck. You know, they can be doing very, very, very well in Singapore alone, but the moment they step out of Singapore, they realize that, hey, they can't really compete with many of the other companies overseas, right? And that is where they prefer to be in their own comfort zone. Not saying that it's a bad thing, okay, because most of the company, if they are still profitable, they do give out pretty regular dividends. So personally, for me, I do see Singapore stocks are mainly good for dividend. Okay, you are looking for positive cash flow every month or every 3 months, you get some pocket money from the companies. I think that's pretty good. But of course, if you want to look at relatively higher growth, you have to look beyond Singapore. And that is why I think a lot of us right now, we are looking at overseas stock like US, okay, and even in China. All right, but of course, in Singapore, I'm not saying that all the company in Singapore cannot make it. Of course, we have a few example, like for example, Sea Limited. Okay, Singapore company listed in the overseas, but you can see majority of their business is not in Singapore. It is actually in many different parts of the country as well. And of course, we have Razer, the one that do a lot of gaming mouse, gaming keyboard, basically anything that deals with gaming, etc. So you can see that their market is actually overseas as well. And of course, Razer is not listed in Singapore. It is listed in Hong Kong, in the Hong Kong Stock Exchange, right? So let's start off with the first discussion. All right, how do we know if a company is growing? Okay, how do we know if a company is growing? So today we're going to do it a little bit different. Okay, I just need you guys to actually type into the chat group, and then we will actually discuss based on all of your finding. So you just take about maybe 3 minutes. Okay, so if you have any answer, just put it into the chat group. We will collate some of the answers that you guys actually have. How do you know if a company is growing? So let me give you a scenario. For example, you look at this company called Sheng Siong. How do you know that Sheng Siong is still expanding? Or how do you know whether they have already reached the saturation point whereby they are no longer growing? How do you know? Very simple. I give you the first clue, right? For example, Sheng Siong, if you see that they are still opening new outlets, so you know that the number of outlets that they have is increasing. Then you know that this company is still growing. Okay, that's pretty straightforward, right? Okay, and of course, some of you are saying about the numbers itself. Okay, the revenue is growing. That means the number of sales is increasing. What else? Cash flow is increasing as well. Yes, very good. Employee is increasing. Okay, so there are people who actually go to places like LinkedIn, and they actually see, for example, very recently Tesla actually did a posting, and they were looking for staff in Singapore itself, and that actually gives you a clue on where they are actually expanding into. So from what I know, Singapore, they actually planning to have quite maybe a mini HQ for Tesla. But one thing very interesting is that, right, under the requirement from Tesla, they actually mentioned that the staff gotta be fluent in Tamil. Okay, the staff that they're actually recruiting has to be fluent with Tamil. So what market do you think they are targeting for Tesla? Yes, immediately okay. Can you imagine if they want to close Singapore, and why would they need to have I mean, yes, of course we do have Indian in Singapore, but again, we understand English, right? So they are looking for people who are fluent in Tamil. Pretty much I do see that they are actually using Singapore as a HQ or regional HQ for Asia, and I believe that they are targeting the India as the other market that they are looking into. Right, any other clue other than increase manpower, increase number of outlets, increase revenue? Let's do a little bit of brainstorm. How do you know if a company is growing? For example, let's look at let's say Nike or Disney. Nike. How do you know whether Nike is still growing? because pretty much you have already seen quite a number of Nike stores out there. In fact, you might see that Nike stores might be closing down, okay, because everything is moving online. And also sometimes it might not be that straightforward. Just by our naked eye, we might not be able to determine if the company is still growing or not growing. Of course, a lot of us, if you are familiar with the numbers, all you need to do is just go to the financial statement. You will be able to know whether the company, are they selling more shoe or are they selling less shoe. Okay, increasing capex, yes, of course, if they are expanding the buildings, for example, like this particular company called TSM, Taiwan Semiconductor, they have been buying more and more factory, more and more buildings to actually build up their fab. Okay, you know that business is good and they are growing really, really well. So like some of you mentioned, increase in capex. That means the number of money that they actually spend on assets like buildings and of course machinery, etc. So yes, that's also a sign that the company is still growing. Dividends, yep, to a certain extent, yes, if a company is growing and doing better, they do give up more and more dividend. Increased acquisition, yes, fantastic. Okay, the company is buying more and more of other company. So there's a lot of merger. R&D, if a company is spending more on research and development, it simply shows that they have the capacity and they are pretty forward looking. Right. So yes, that is very, very good coming from all of you. All right, so let's move on. I think this is pretty straightforward. How do we know whether the company is doing well? Let's look at the sales. If the sales is increasing, okay, that means the revenue is increasing. It simply shows you that the business they are selling more. Okay, but selling more is not enough. Okay, let's look at this particular example of Joy. Joy over here. Let me just do a spotlight. Okay. Yes, so for example, if we look at Joy over here, Joy is selling 2020 CNY sales. This is last year's sales. So Joy actually sold 500 bottles of CNY cookies. Each bottle sold at $10. The cost of each bottle is $3. So Joy hired 2 friends to help for 1 month and paid them $1,500 each. So can you let me know what is the net profit for Joy? 500 cookies sold at $10. So total, she collected $5,000. Okay, so $5,000. The cost of each bottle is $3. Anybody have got the correct answer? What is the net profit for Joy? Okay, we have 500, 2,000. Okay, let's wait for a few more answers. I'll give you a little bit of time to do some math. Later, I will show you how I get my answer. Okay, 500, 500, 2,000. Let's get about three more answer after JJ. Two more. Okay, give you a little bit of time. We have about 97 of you are almost reaching the maximum capacity. Okay, 97 of you are. So yeah. Okay, Elena typed 500 as well. Jeffrey also typed 500. Okay, let's see, is 500 the correct answer? Yes, okay, so 500 is the correct answer. So Joy said, wow, I work so hard and then I only make $500. My friend, I hired and I make 1,500. So something must be wrong somewhere. All right. So Joy is thinking, what can I do better to make 2021 a better year? Okay, so this is our second discussion for tonight webinar. How can we actually help Joy increase her net profit for 2021? Okay, so imagine today you are the consultant. You are the consultant for Joy. Okay, you want to turn his business around to make more money in 2021. What can you do to actually help her improve her net profit? Okay, again, put it down into the chat group. Okay, you can be a little bit more specific. I know some of you is saying about lower cost. How to lower cost? Maybe you can elaborate a little bit further. Okay, increase selling price. Yes, lower cost. Fantastic. Online sales. That means reaching out to more people online. Okay. Yep. Increase pricing. Lower sales cost. Increase sales both online and offline. Sell more. Okay. Yeah, pretty much. Okay, pretty much quite straightforward lah. Sell more and cut costs. Any other ideas? So for example, if let's say, I'm pretty sure that you have friends or you have relative who is selling cookies one. Can you imagine if they ask you, hey, how can I make my business better? Then you tell them, just sell more lah. Sell more online and sell more offline and lower your cost, and then you can make more money. Then they say, yeah, I also know lah, but how to do it? You know. So let's try to think of it today. If let's say you are the business owner or you are the consultant to join, what are some of the maybe more actionable plan that you can actually advise her? Know why you are not selling. Okay, that means try to do a little bit of research, like, you know, is it because my cookie is not nice, or etc etc. Try to get more data, hire more people so that you can sell more. Okay, don't forget, every person that Joy hired, she pay 1,500. So if she hire one more, technically she lose money based on the number of sales. All right, get listed. Okay, advertise on Facebook and Google advertisement and distribute flyer. Yes, that could be one of the way. Okay, let's analyze this particular method. Advertise on Facebook, Google advertisement, and distribute flyer. When you actually do this, okay, on the front end, do you need to pay money or do you receive money immediately? Can you just type in pay money first or collect money first? Okay, pay money first. Okay, and that is actually one of the reasons why a lot of small business owner, they actually don't do it, is because, you know, before I know whether my sales will increase or not, I have to come out more money. Like, what if okay, I pay a lot of money, I pay $1,000, $2,000, $5,000 for advertisement, and in the end I don't even make back that amount. You know, so Joy will be like, wow, last year at least I still make $500. This year I do advertisement, I sell more, but end of the day I lose money. Right? That could be the worst case scenario. All right, and what else? Pay first. Okay, offer discount for more purchase. Okay, any offer discount for more purchase. Okay, that works as well. Other than that, change GTM model. What is GTM? Maybe Tin, can you elaborate a little bit further? What is GTM? Oh, go to market model. Okay, change the go to market model. Okay, source for cheaper ingredient. Yep, I think that is very, very important. Okay, to source for cheaper ingredient, and that is how can you. Okay, let me ask you a simple scenario. Okay, how can we advise Joyride to source for cheaper ingredient? Of course, you will say that, you know, try to talk to different supplier and other than that. But pretty much, okay, one of the easiest way for you to reduce the cost of the ingredient is to increase the volume that you actually buying. Agree or don't agree? If you agree, can you type agree? All right. If you want to lower your cost, you have to increase the volume, and that is actually one of the reasons why we actually talk about this thing called economic mode. Okay, and we talk about this thing called cost advantage. So for people like Sheng Siong and NTUC, why is it that you realize that sometimes, right, the vegetable, the fish, the meat that they are selling, right, is even cheaper than going to the wet market? It's because they are buying in such a big volume that they are able to get it at a very, very, very low price. So that is also one of the reasons why they can easily get rid of their competitor, especially the wet market, is because they can price their vegetable, the meat, everything way lower than, you know, your auntie, uncle selling vegetable in the wet market. You know, so yeah. So volume does plays a huge part. Economy of skill, right? So I think like some of you mentioned is that he can do marketing, he can sell more. And when you have the capacity to sell more, you reduce the cost because you order more. And so you have to negotiate with your supplier, etc., etc., etc. So this is exactly what happens to the real business, okay? So whether is it a listed company or any other company, you realize that the whole thing is exactly the same. Even if you look at Sheng Siong, okay, do you think they need to negotiate with the farmer to get a better price? The answer is yes. Okay, if they can manage to get a lower price for the items that they sell, they are able to increase the margin. And for every vegetable they sell, they can make more money. All right. And one of the things that they do, if you realize for many of the supermarket, is that after they have a certain skill, many of the items they actually do it in-house. That means they create their own personal branding. All right. So anybody know what is the household branding for Sheng Siong? What is the household branding for Sheng Siong? What is the household brand? What is their internal brand? If you have been to Sheng Siong, you should realize that nowadays there's a lot of these brands starting with the letter H that appears everywhere inside Sheng Siong. Anyone know? Or you all didn't realize? Yes. Okay, Ray got the correct answer. Okay, happy family. Okay, next time you go to Sheng Siong, go and take a look lah. Everything you see are all happy family, happy family, happy family. You turn around, you can see manufactured by who or distributed by who, then you understand that it's actually their in-house brand. Okay, it's distributed by Sheng Siong. Okay, and I think SK got a very, very good point as well. Lower employee salary with commission they sold. So previously, if you look at the model that he's giving the staff is that $1,500 for each staff. But they can also, Joy can also motivate the staff by changing the 1,500 into a commission model. That means when you do it into a commission model means that, okay, if you actually help me to sell more, then you can make more lah. So you have the potential to make 2,000, 2,500, 3,000. Okay, but of course, if you don't work hard enough, you could earn less than 1,500 as well. So it becomes more aligned. So it makes the staff more aligned with the business itself, right? So that could be also one area. Right, so for now, okay, I think this is just a lot of brainstorming session also to help us to understand in terms of the business. Okay, it is not just about selling more. Okay, sometimes it's about cutting or lowering the cost of production. So if you look at Tesla, okay, so how does Tesla actually make more money? So of course, the most obvious one is that you know that they are growing when they actually sell more cars, which means that over here you can see that from 2015 to 2020 on a quarterly basis, they are delivering more and more cars. So you know that yes, definitely they are growing. But other than that, okay, they are also doing this thing called increased efficiency and reducing cost. Because when they actually do this, even though they are selling the same amount of cars, they can actually increase their net profit. Okay, which means that they becomes more and more profitable. And yeah, like some of you, yes, they invest in Bitcoin. And yeah, I think this afternoon somebody mentioned that the amount of profit that they make selling car, they make more from Bitcoin. Right? I mean, that's something that's really smart, but of course that's I don't know whether that's a strategy or not, but yeah, it's working for them. So vertical integration is what Tesla is actually doing. So what does vertical integration mean? Basically, if you look at this particular column over here, from the retail to the assembly, to the parts, to the component, to the raw materials, okay, if your company is doing everything, okay, all under one roof, okay, you will be able to keep the cost pretty low. So if you look at Tesla, okay, why is Tesla a vertical integration company? If you look at the raw materials of the electric car, the raw materials is of course battery. All right, so battery itself, if you want to go even deeper, we talk about lithium. So if I'm not wrong, Tesla owns or acquired some lithium mining company, okay, lithium mining companies. So even the raw material is also part of their process. Okay, then of course to the manufacturing, you have the Gigafactory, okay, for Tesla. That is where they actually put all their vehicles together. And of course, once they are ready, after they complete the assemble, they want to sell the car. So this Tesla showroom that you see, is it under another company? The answer is no. It's also under Tesla itself. Okay, so the retail is also direct from Tesla. So for example, in Singapore, I think not too long ago, Singapore government allowed Tesla to come in. And if you look at it, where do you order Tesla? Do you go to a authorized dealer in Singapore? Okay, the answer is, of course, previously, yes, you have to go to a dealer to import it. But right now, if you're going to buy a Tesla, you actually go to the direct Tesla website. Okay, you go to the Tesla website to buy a car. So can you imagine this? Actually, I would say that in Singapore, this is pretty much the first time anybody ever buy a car directly from the website, okay, without any salesman, okay, without any salesman, or without many people without even looking at the car itself, simply by, oh, I just want to buy a Tesla, and then I just go to the website, pay a deposit, that's it. Okay, you even choose the color, choose whatever engine you want, everything is done on the website. So Tesla They do the raw materials, they do the manufacturing, they do the assembly, they are the retail. Basically, this is what we call vertical integration. So when they do that, what happens is that they are able to keep the cost extremely low. Okay, they're able to keep the cost extremely low. So you can see over here is that, okay, just one of the most powerful thing that just by doing this is the advertising cost for Tesla is extremely low. So you can see Tesla advertising spending versus its competitor. You know, many of the other companies like General Motors, Ford, you know, Toyota, Honda, they do have to spend quite a number of money, you know, doing a nice video, creating some hype, you know, etc., doing a lot of Facebook marketing, newspaper. But Tesla, okay, it has $0 spending on advertising. Okay, so maybe we can discuss this. How do you think Tesla actually do its marketing? How does Tesla make other people know about the car? What is the strategy used by Tesla? Can we just put it into the chat? Because I think this is a very, very smart move coming from them. So we have to also look at, is there any other companies that could also replicate the same model? Okay, word of mouth. Okay, word of mouth. Yes, of course. They create a hype, you know, so all the newspaper, everybody is just talking about the new Tesla car, etc., etc. PR, okay. Any other? So some of you might be saying, you know, Elon Musk is like a celebrity, etc., etc. Yes, that could be also one of the reason. Any other guest? What is the platform that Elon Musk loves to use? What is the platform? Okay, yes, that's right, Twitter. Okay, Twitter. All right, so you can actually see that Elon Musk do have quite a big, you know, follower on Twitter. Okay, and in fact, he does give a lot of updates on the Tesla car on his Twitter account. So it's like telling you that, hey, right now we are coming out with this new advancement. You know, so you get to really follow the whole story on Tesla on Elon Musk Twitter itself. So whenever he said that, hey, next month I'm going to launch this new car, it's going to be one of the best, it's going to be the fastest, you know, it can travel the most miles. And then when it launched, okay, immediately, because there's already a lot of people who are following it, there's a lot of hype, you know, surrounding it. All right, so the moment they launch the car, all they need is all you need to do is just place a deposit. Immediately, you know that the number of deposit that comes in is really, really crazy. Right? And one of the things that he does a lot is to make use of social media other than Twitter, you know, like a Facebook, Instagram, and all that, and as well as YouTube. So what happened is that for all the launches on Tesla car, Elon Musk actually invite, you know, those YouTuber that, you know, so Tesla has got like a Tesla fan base, you know, there's a lot of analysts or YouTuber that likes to talk about Tesla cars. So what Elon Musk did is that whenever they have a new launch, they invite all these YouTuber, and all these YouTuber, each of them have like a 200 to maybe 500,000 subscriber base. You know, so what happened is that these people get a first hand to test the Tesla, and then they put it onto their YouTube, and you know the YouTube gets shared to many people. So that's actually in a way how they actually get all the videos out in a very, very short period of time, and most importantly, without spending a single dollar. Okay, without spending a single dollar. So another company that managed to do it really, really well is, of course, this company called Apple. So just now we talked about Tesla using vertical integration. Apple has a slightly different strategy to reduce cost. Okay, and of course, how does it increase the efficiency? It does it in the way of a horizontal integration. All right, so you can see that Apple itself, okay, they don't actually create the chip on their own. They don't create the screen. Of course, they do assemble. Okay, no, in fact, they don't even assemble. The assembly comes from this company called Foxconn. So everything is outsourced. Okay, yeah, from the material to the manufacturing to the raw materials, everything is outsourced. They only come out with what? They only come out with the design. Okay, but what they did is they actually do this thing called a horizontal integration, whereby the same branding, they actually put it into different products. So that means if you are buying Apple, you're not just buying one phone. You're buying the phone, you're buying the laptop, you're buying the earpod, you're buying the Apple Watch. Okay, and not only that, everything revolves around the Apple services, which is the iCloud as well as the iTunes itself. So that is the platform or the ecosystem that they are actually building on. And something really, really interesting is that, right? Okay, Apple has been buying up a lot of companies, okay, relatively small companies, okay, throughout the years. You can see that these are all the companies that they have actually acquired from 2010 all the way to 2017. All right, and that is how they actually build out the I would say the ecosystem lah, to where they are today. So it's not that straightforward. It's not like just create an iPhone and then everybody start buying it. So it's not just that simple. They actually do a lot of things behind the scene, but of course everybody is just looking at the brand itself, Apple, and of course how simple and how easy it is to use, right? So that is something that is very, very strong, the branding itself from Apple. So as you can see over here, horizontal integration is actually the process of increasing production of goods or services at the same part of the supply chain via internal expansion, acquisition, or merger. So the process can lead to monopoly if a company captures the vast majority of the market for that product or services. Okay, so they expand, and pretty much they want to dominate, the whole market, in all the different category. So that is what horizontal integration is all about. Not so much about cutting costs, but rather to gain market share. And once you gain the market share, you can actually command a higher premium as well, right? So it's just like, the earpod that they have, that the cost of this earpod is definitely very, very cheap. Okay, people, maybe you go to China, you can buy it at $5, $10. But why is it that they are able to price it at almost $200? Okay, number one is of course because of the branding. Number two is of course it's also because that you already have iPod, you already have a laptop, the Mac laptop, then you have your Apple Watch. Okay, then naturally, right, the next thing that you want is the earpod. So it's like you already have it lah. So they are able to actually price it much higher. Okay, whatever you can think of, they will be one step ahead of you, and they will come out with their own branding of that, and you will want to buy it. So for the Apple design or Apple user over here, do you agree with that? Whenever they come out with something new, you will want to buy one. I don't know what's next lah. Maybe Apple sunglasses. All right, so in terms of this new model that we are looking out for, so what happened just now, I mentioned that there are many companies like Tesla and Palantir. These companies are not profitable, or at least when they just started, they are not profitable. But the share price has been going higher and higher and higher and higher. I think end of the day, okay, for us as an investor, we want to make money. If the share price goes up, we make money. All right. So how are we able to look at companies like this? That means companies that are not profitable, does not have a track record in that particular sense, but yet they have the potential to do really, really well moving forward. So these are the 4 new criteria that we will be looking out for. So in terms of the earnings, okay, previously we were looking at earnings per share, right? So what happened is that in this new model, we will be looking at revenue growth instead of earnings per share. Okay, because a company can be selling more. So when they are selling more, for example, Tesla selling more cars, okay, the revenue will grow, but that doesn't mean that they are profitable. So they can still be, losing money, but it just simply shows that they are actually growing. And of course, under the cash flow, we are looking at positive free cash flow. All right, previously we were looking at operating cash flow, and the new one, that is efficiency, we are looking at consistently above 50%. Okay, what is consistently above 50%? Okay, let me just add it in. We are looking at the gross margin. Okay, gross margin. Maybe you can just put it somewhere. Gross margin to be consistently above 50%. All right, and of course, the last one is the debt. Okay, debt, we are looking at current ratio above 1.5. So these are the 4 new criteria that we are looking out for. Okay, let me just put it over here so y'all can take a snapshot, take a photo or anything to help you to remember, because later on, we will be using this 4 to look for companies. Okay, we'll be using this 4 to look at companies. So make sure that you actually, put it somewhere, take a photo. All right, and once you are done, let me just move forward. So as usual, okay, we will be able to vote them based on the number of stars. So of course, the best will be 4 stars. That means all 4 all passed. Okay, 3 out of 4, in my opinion, will still be relatively okay. All right, but anything that's below 2, to me, is out. Okay, anything that's below 2 is out. But later on, you will be able to realize that there are actually quite a number of companies that belong to both 4-star and 3 stars. All right. So we are not extremely strict when it comes to the requirement. Again, like I said, this is a framework. So of course, there are more checks to be done, but I would say that this will be able to help you to actually remove those that are definitely out of the picture. So later we will elaborate more further, but pretty much I can share with you now is that you will get quite a number of 4-star and quite a number of 3-star. So if you want, you can be even stricter, okay, to select only the 4-star. To select only the 4-star. Okay, so I know some of you would probably have a little bit of questions, okay, with regards to the new requirement, okay, like what is the difference between operating cash flow and what is the difference with free cash flow. So I'm going to touch on this just in a while. And of course, there's also this new term called current ratio. What exactly is it? Let me explain it. Right, using the Joy example again. Right, so if you look at Joy, okay, so just now based on what we have shared, the number of total cash collected from selling cookies is $5,000. The ingredient cost for Joy, okay, is $1,500 based on $3 per bottle. And the salary for her friend is $3,000. As a result, the net cash flow is $500. So you can see 5,000 collected, 1,500 for the ingredient, 3,000 for the salary. At the end of the day, she still have $500. That is the operating cash flow. And let's say Joy bought a new oven to make cookies and that cost her $800. So which means that, okay, for the free cash flow, what we are doing is we are taking the operating cash flow, we have to minus away the capital spending. Okay, that means the money that you actually use to buy an asset, in this particular case, to buy the oven. All right, so 500 minus away 800, that would leave Joy with a negative 300. So if you look at a free cash flow perspective, Joy would have a negative $300 for her free cash flow. So based on our new criteria, it is going to be a fail. All right. So why are we using this? Is because a lot of new companies, like I said, they do reinvest quite a number of their cash flow, okay, back into the company, because they always believe that, you know, I'm still growing, I should reinvest the money back, you know. But at the end of the day, we also want a company, even though they are new, to have relatively healthy cash flow. So if this particular company, right, okay, is able to collect all the money based on the sales, and then they reinvest back for capital, for R&D, and after doing that, they still have positive cash flow. Okay, to me, I think that is something that is much better. Even though they are new, that doesn't give them the excuse to have a negative cash flow. As much as possible, we still want that company to give you a positive free cash flow. All right, and that's the reason why we use that. The next one is current ratio. So what is current ratio? If you look at the formula, really simple, it's just current asset minus divided by current liabilities. So can you just put it in right now? Okay, now is the time to practice your brain a little bit. What are some of the examples of current assets? Okay, current asset. Can you just type it in? Yes, cash. That's great. That's great. That's a very good example. Yes, cash is considered a current asset. So just a clue to all of you is that any asset that can be converted into cash in a short period of time is also considered a current asset. So for example, cookies, yes, to a certain extent, okay, if the cookies can be sold easily and can be turned into cash, yes, that does considered as usually that classifies as the inventory line. Okay, but yes, you can consider that as an asset as well. Other than that, maybe you have fixed deposit. For example, Joy has got a 3-month fixed deposit. So which means that if anytime you need the money, theoretically you can actually forfeit, okay, the interest, and you can actually withdraw the money out. So fixed deposit, like a short-term fixed deposit, that is also considered as a current asset. Or if let's say we talk about gold bar, okay, a gold bar can be liquidated and turned into cash. That is considered a current asset. And of course, Bitcoin, Okay, it can also be considered as a current asset as well because it is liquid, highly liquid, right? I believe it is highly liquid. I'm not I'm not invested in Bitcoin. Okay, so yeah, I believe that it is highly liquid, right? So that's the whole idea. Basically, you take whatever that can be sold, converted into cash, okay, the current asset divided by the current liabilities, and that is basically your short-term debt, okay, any short-term liabilities that you have to pay out. So very simple, current asset must be more than the current liability, and like I said, our requirement is 1.5. So we want the current asset to be at least 50% higher than the current liability. All right, that is just to share with you in terms of the cash flow. Okay, let's go to the market. So what happened is that you have all this company. Let's look at the first company for today, and that is this company called Tesla. So first of all, like I said, the company that we are going to look at today, why I actually chose them is because if you look at the share price, it has gone up tremendously from, I don't know, from $100, went to 200, went to 300, went to 400, went to 500, went to 600, went to 800. Okay, these are high growth company. And if you look at the number itself, okay, now is the time whereby you all let me know if the number is blur or clear. Can you all let me know? Are you all able to see the number? Is it blur or clear? Clear. Okay, that's great. That's great. Right. So if you look at the revenue based on our new formula, can you see that in terms of the revenue itself, it is growing tremendously. Okay, like from 100 to 200 to 400 to 2,000 to 3,000 to 4,000, 7,000, 11,000, 21,000, 28,000. You know that this company is selling more and more cars. Okay, other than that, the number of revenue or cash collected is increasing. The second one is gross margin. Okay, yeah, for Tesla, unfortunately, you can see that they are in the car industry. So the car industry as a whole has got relatively low gross margin because, you know, the cost to manufacture the car is relatively high. But if we compare Tesla to many of the other competitors out there, like General Motors, Toyota, Honda, I would say that Tesla has got a relatively high gross margin compared to the rest of the peers. So in that sense, they are doing pretty well. But just overall, if you look at all companies equal, Tesla gross margin, I will classify them as a fail because we are looking at 50% consistently. Okay, above 50% consistently, right? But it's okay. Let's move on to the next one, free cash flow. So can you see that previously, Tesla has got negative free cash flow, but you can see over the last 1 year, okay, they have turned positive. Okay, they have turned positive, and that is a really, really good sign, which means that right now with a positive free cash flow, the cash flow will be a lot healthier, and of course there's more room for you know, to spend more money. They can actually allocate the resources to many other areas as well. So once they go positive free cash flow, you know that, you know, in terms of the cash flow wise, they are a lot healthier. They are a lot better, in a better position. And last but not least, if you look at the current ratio, we're just going to focus on the last column. Okay, and you can see it's actually 1.63. So that is a pass. So for Tesla, it is a 3-star company, which in my opinion, not bad, is quite good. Okay, are y'all able to understand the 4 criteria? If you're okay so far, can you just type in 555? Type in a 555 if you're clear so far with the new criteria. Okay, let's get more people to type in first, okay, before I move on. Yeah, in the meantime, I can drink some water. Okay, that's great. So moving on to the next company that really, really got my interest, and that is Pinterest. All right. Yes, this is a company that basically it's the 3rd largest social media, okay, behind Facebook, and that is Instagram. And I think after Instagram is Pinterest, if I did never get my facts wrong. Okay, so again, whatever I shared, please do your own due diligence, okay, before I move on. Okay, whatever I share with you today is not a stock advice, okay, please do your own due diligence because investment carry risk, right? So yeah, Pinterest, okay, this is the company that I'm really, really interested in. What happened is that this company from $15, in fact $10, it went all the way up to about $80 within about a year time, right? So last year has been a really, really good bull run for many of the companies. So let's take a look at this particular company based on our 4 criteria. So same thing, revenue, is this company growing? You can see the answer is yes. Okay, it is growing. Gross margin, is it consistently above 50%? The answer is yes. Okay, and that is okay. So anything that's above 50%, number one, is pretty amazing already. Okay, pretty amazing already. And of course, we also want to make sure that the consistency is there. All right, so there's just a couple of factors to look at. So 50% consistently above, and that is pretty good. And you can see it's actually increasing. Okay, then that's even amazing. And a free cash flow, you can see that at the start, they are negative, like I said, because they have to spend a little bit more on the capital spending over here, right? Then after that, once things become more and more stabilized, you realize that the capital spending tends to drop a little, okay, as things becomes more and more, better. And of course, the operating cash flow become positive. So because of that, the free cash flow, you can see, is actually positive right now. And that puts them in a relatively good position in terms of the cash flow. And last but not least, let's look at the current ratio. So current ratio, we are looking at above 1.5. Pinterest has got 11.5. I believe that this is a company that has got a lot of cash, plenty of cash, and pretty much very, very low debt. You can see the debt is 0.06. So yeah, lots of cash, pretty low debt, high growth, high margin. I would say that pretty good business to be in. So this is a 4-star company. Next company we're going to look at is this company called CrowdStrike. So CrowdStrike is basically how do I call it? It's like an antivirus, okay, but it's pretty much towards the all the phones that you have, the laptop that you have, right? So very, very interesting company. Let's look at this CrowdStrike. Yes. So again, this is a high growth company. So you can see that the numbers are only coming from 2017 onwards. So revenue growth, is it growing? The answer is yes. Pretty obvious, it's growing pretty fast. And if you look at the gross margin, is it consistently above 50%? I would say that if you look at the last 3 years, it is definitely way above 50%, 65%, 70%, 72%, right? So usually I'll focus on the last few years, all right, because that is the more current one. So previously, when they first started, maybe not so good, but there must be something that they have done correctly. It could be the branding, it could be cost advantage. They have reached a certain skill, okay, and that is where they can actually charge a margin. So if let's say today, okay, so some of the examples I just want to touch on now. Why is it that a company is able to have such a high gross margin? Usually they have a kind of mode. Okay, so a mode can be like a branding, intangible asset, or it could be cost advantage. They are able to buy in bulk, so they can keep the cost really, really low. Or for example, in certain pharmaceutical company, they have got a patent, all right, or there must be some advantage they have. If let's say we are talking about a business that is highly competitive, okay, when you have a business that is highly competitive, what happens that you tend to have to put the price, you have to compete for prices. And when you compete for prices, what happens is that your gross margin tend to be really, really low, somewhere in the range of 10 to maybe less than 20%, right? So anything that's above 50 to me is really a very, very good point. And to be able to, go up to about 70%, that is really, really amazing. Free cash flow, once again, you can see that most of this company that is high growth, they all started with negative free cash flow. But one of the good signs that this company is doing well, okay, is that the free cash flow actually turned positive. And the next one is, of course, the current ratio. Once again, just to make sure that the short-term, they are able to cover the short-term debt. So the current ratio, we're looking at above 1.5. This is 1.91. So yes, it is also a good based on the 4 criteria. So 4-star company for CrowdStrike. And right now we have a very, very good question. Okay, already high now, still a good time to enter. Later I'll touch on a little bit on when would be a good time to enter. But for today, we are just probably going to focus more on, is this a good company? Like I said, when it comes to investing, there's actually 4 components. Okay, now is the time for us to do some refresher. Can you just type in what is the 4 component that we have to look at other than today, which is fundamental investing? Can you just type in what's the 4 criteria of the boat? FATA. What's the other 2? Options and what's R? What's the last one? Shortcut. What's R? No, fundamental, technical. Yes. Siu Moon is correct. Portfolio management. Okay, yeah, portfolio management. That's the life boy. But of course, if you want to know when is a good time to enter, I would say FA. Yes, you can actually, again, like I said, you can look at valuation. But I also have to tell you upfront is that valuation in current perspective, I would say, yeah, maybe out of 10, now all 10 will be overvalued. None of them based on value investing will be undervalued. Okay, all of them, 100% will be overvalued. All right. And of course, there will be people who say that, no, we have created a new way of analyzing or evaluating this particular company. And based on my new way of valuation, this company is undervalued. Okay, so that's exactly what happened during the dot-com bubble. Okay, everybody have a new way of analyzing the internet company. So yes, they are correct until the bubble burst. Okay, yeah, you are right. As long as now you're making money, you buy, the price go up, you can say, see, my valuation method works. And when the bubble start crashing down, everything goes back to normal. Oh, okay, yeah, valuation, we have to stick to the most fundamental way of valuating, and that is the Warren Buffett way. So pretty much, if we look at the Warren Buffett way of valuation, I would say most of them are overvalued. So personally for me, yes, I still look at the good company, but in terms of valuation, I don't really spare so much time looking at the valuation. But I use TA, I use technical analysis to help me to determine whether this stock will continue to go up higher, or whether is it a good time to jump in and capture a short momentum of the uptrend that it is going. So for me, I use TA to help me to know where is a good time to enter. All right, because I know the valuation for me, probably not, I prefer not to use it. Okay, because I would tell myself, yeah, I think this is undervalued. Imagine you say that this is overvalued, but all your friend is telling you that they are buying it and they are making money. Okay, one day you will tell yourself that, yeah, I think this is undervalued. Just to check today, we will touch on how to pick undervalued stock. Today we gonna touch on a little bit of that. Later, if I have time, I'm gonna touch a little bit on that, but more on the TA side. Okay, not on the valuation side. So valuation, you have to look at the fundamental investing 2.0. That is the valuation. All right, don't worry, we are coming to the exciting part, and that is the part whereby you all need to do some work already. Right, so this is what we have. Okay, the 8 companies over here. Okay, okay, and this one later that I show. Okay, so now is the time to do a little bit of work. Okay, the time now is 9:40. Okay, perfect timing. So everybody, let's go to our Safari. Okay, let's go to Safari. Okay, and I want you to go to this particular link, bit.ly/fundinvest. All right, so once you go to this particular link, bit.ly/fundinvest. Okay, you will be able to see this particular spreadsheet. So what happened is that, okay, these are the 8 companies are the companies that we have gone through earlier on 3 weeks ago. All right, on the 7th of Feb. So today we are going to look at a few more companies, and that is this 1, 2, 3, 4, 5, 6, 7. Okay, can share link. Can somebody help me to repost the link into the chat group, bit.ly/fundinvest, FUN invest. Right, so today we are going to look at this 1, 2, 3, 4, 5, 6, 7 companies. Okay, and I need y'all individually, individually y'all can do okay, to run through the numbers. Okay, so if you are fast, you might be able to go through 3 or 4. If you are slow, at least just pick one of them that you love. You love the company, you love this name called Car Gurus. I'll go and check it out. Okay, and then run through the figures over here. All right, I'm going to give you about 10 minutes. Okay, 10 minutes to do this simple exercise. And once you are done, later on, we're going to come back. We are going to fill in all the figures. And then I will actually show you a little bit of the technical analysis on, after I look at this, how do I enter, or when do I enter? Okay, so that is coming up next. So I'll give you about 10 minutes for you to do this very, very simple exercise. Again, you can do it at your own pace. Just pick one of the company that you like and then go to Morningstar. So for those of you who are not sure how to do that, let me show you by going through one of them, which is, let's say, Tandem Diabetes Care, TNDM. This is the ticker symbol. What you need to do, very simple, go to Google, type in the ticker symbol, TNDM space Morningstar. Right, this is the part whereby if you have not seen how we do it, it's good for you to follow me through this particular exercise so that you know exactly where I can get all the figures that I have shown you earlier on. So once you go to Google, you type in TNDM space Morningstar, you will come to this website. Okay, once you're in, I want you to go to the center. You will be able to see this thing called key ratio, right? So click on key ratio and move to the bottom. You will be able to see this key ratio, full key ratio data. And I need you to click in. Once you are in, okay, that is where we get all the information that we are looking out for. So starting with the first one, and that is revenue. Okay, can y'all tell me whether this is a pass or a fail? Just give me a minute while I post the link on the chat group. bit.ly/funinvest. Okay, yep, there you go. I'm not sure if you are able to edit the spreadsheet, but if you can't, yeah, basically you can just see I will be filling up the spreadsheet for all of you. All right, so it's just for you to be able to get access to the spreadsheet itself. All right, so if you look at this particular company, can you all share with me right now, based on the revenue, is it a pass or fail? P for pass, F for fail. Okay, thank you so much, Lillian. Yes, this is definitely a pass. So what about the next one, which is the gross margin, the second column over here? Is it a pass or a fail? Right, again, you can see that it used to be not so good, but after that, it has been increasing. And over the last few years, in fact, the last 1 year, and the current, it is above 50%. So for me, I will put it as a pass as well. So this is a pass. Next one is the free cash flow, which we can get over here. Is it a pass or fail? Right. Yes. So if we are going to be strict, you can see that there's a -6 over here. So we can actually fail it. But pretty much you can see that. Can you see that the free cash flow seems to be improving? And in fact, 2019, it actually went positive. But subsequently it reinvested quite a fair bit. You can see the capital spending was pretty high. Okay, and that is why the free cash flow goes back to negative. Right, so we're gonna be strict. We're gonna put it as a fail for the free cash flow. Last but not least, where can we get the current ratio under financial health over here? Right, if you go all the way to the bottom, you will be able to see current ratio. If you go all the way to the extreme right, the current ratio is 5.61. So that is a pass. So coming back to the spreadsheet itself, you can see that for Tandem Diabetes, this is a pass. Free cash flow fail. So how many star is this company? Can you all type it in? How many star? How many star? Yes, great, 3 star. This is a 3-star company. Okay, so let's look at another company. Okay, so which company do you want me to go through next? Okay, so for those of you, if you are good enough, okay, I want you to go to your own browser. If you're using a laptop, go and practice. Okay, for those of you who do not have a browser, or you're using your phone, or you're not sure where to click, then you follow me. Those of you, if you're good, go and practice. Okay, go and practice on your own with the companies that I have over here. Because when you actually go and do it, then you will get to learn. Because you can watch me 10 times, 20 times. I can tell you, after that, you go to your screen, you will forget everything. Okay, Palantir. Oh, well, y'all give me different company. Okay, the Palantir answer is already here. So let's choose one of them from here. One of them from 9 to 14. Shopify. Okay, Shopify also not here. 9 to 14. 9 to 14. Okay, CYBR, CyberArk software. Okay, let's take a look at CYBR. So I'll repeat the whole process one more time. Okay, go to Google, type in the ticker symbol, or you can also type in the full name, CyberArk. Then you type in space Morningstar. You can see that, okay, you can see the first one is advertisement. So that one ignore. After that, you can see this is Morningstar. So you can go in. Pretty much out of 10 times, I would say 9 times you will come to the correct place. Okay, so you come to Morningstar, CyberArk software. Okay, go to key ratio and then click on the full key ratio data. And once you are here, okay, once again, let's take a look at this particular company. So can you let me know based on the revenue, pass or fail? Okay, this is a pass. Okay, what about margin? Gross margin, also a pass. Okay, that's great. And what about the free cash flow? Also a pass. Wow, you are typing very fast now. Financial health. Okay, financial health under current ratio, 4.47. Also a pass. So how many stars? 4 star. Okay, yes. Let me fill up this particular screen first. I know you're very excited right now. Some of you will be like, wow, this company is good. So can I invest right now? Okay, let me share with you right now whether is it a good time to enter or not. Okay, based on technical analysis. CYBR. Okay, let's go to CYBR. I think I should be CYBR. Yes. Okay. Yeah, so if I just zoom out the screen a little bit, you will be able to see that this company has been performing pretty well. Okay, 2015 it was about $27. Now it's about $163. You can see it's definitely a nice uptrend. Okay, for this particular company. But right now, like I believe all of you can see that the share price has actually gone up pretty high. So is it a good time to enter or not? What do you think? Good or bad? Good time to enter or bad time to enter? Can you just type in? I just want to hear from you guys first. Bad time. Okay. Actually, I'm quite curious about. Okay, can I invite maybe a few of you to actually share with me your personal perspective on how you view this particular company, this particular chart. Wait, let me allow you to unmute yourself first. Can I invite Victor? Victor, are you here? Can you just unmute yourself, Victor? And very quickly, share with us a little bit of your personal view on why do you think this is not a good time to enter? Victor, are you here? Suddenly disappear. If Victor is a bit shy, maybe we can have Jeffrey. Are you able to unmute yourself? Unmute yourself, Jeffrey or Victor? Yes, somebody is unmuting. Hello. Jeffrey, Victor. Don't be shy. Okay, you can type lah. Okay, I let you type. Anybody who is not so shy one. Let's choose a lady. Okay. Lillian, are you able to share with us your perspective on why do you think this is not a good time to enter? Okay, Dow Jones has hit all-time high. Very good point. Very good point. Okay, let's wait for Jeffrey. Okay, allow me to actually share my point of view. Previously, I did mention during the UI day, I mentioned that there's actually 2 good timing for you to enter the stock. Number one is when you have a crossover. What is a crossover? Okay, for example, you see over here, you can see that previously it was going down, right? It was going down, right? And then you see that there's a crossover. So you can see this line crossing and then going upwards, right? This is a good time to enter. Okay, but after that, you can see it start to go down again. So after that, where is a good time to enter? Actually, it's over here. Can you see? The moment the thing cross, this is a good time to enter. All right. So what happened is that, okay, right now you can see that the thing has really gone up so much. Okay, the thing has really gone up so much. So pretty much based on this particular crossover, not a good time to enter. Okay, another good timing to enter is to look at market new high. Okay, market new high. So you can see that previously, okay, let's look at a little bit of the buying and the seller psychology. So imagine previously you buy here lah, okay, and then you buy, then you make money, so you're happy, right? Okay, but I want you to imagine, right, if let's say you actually bought somewhere over here, okay, so you bought somewhere over here, and after you buy, what happened? Like a lot of people say, every time I buy, the price will drop. So yeah, exactly like what you expected lah. After you buy, the price drop. So you lose money. From July, you wait a lot until I don't know how long, maybe about 6 months. 6 months down the road, almost break even. Okay, let's say you're buying share, almost break even already. What will you do? Can you share with me? Your personal, like you have been through this, okay, you bought it here, you wait 6 months, you lose money 6 months, finally almost break even. What is the first thing you will do? A lot of people will actually start to sell. Why? Because they want to cut loss. Wow, hey, I bet, wow, finally this stock almost let me earn back my losses. I better get out already. So most people would actually sell. And that is where this is what we call a resistance line. So at this particular price point of the previous high, there is a lot of selling pressure. Okay. So as of course you can see over here, I don't think it's because of this, but there's a lot of selling pressure. So the thing went all the way down. But in the case over here, you can see that the price, right? You can see when the candle is green, right? It basically tells you that there's a lot of buyer, or in short, the buyer is more than the seller. So when the buyer is more than the seller, basically the market goes higher. Okay. So looking at this particular part, can you share with me who is winning? This few candle over here, who is winning? Buyer is winning or the seller is winning? Simple question. No trick question over here. Okay, very simple, right? Buyer is winning, right? Okay. So if you look over here, let's just zoom in onto this particular candle over here, and then you see this part over here whereby the price go above the resistance. Okay. Again, like I said, okay, this is a little bit advanced, but today I'm going to share with you as much as I know. Okay, is that when you see this candle breaking above the resistance line, it is a good sign. It is a good sign that there's a potential, okay, chance that the stock is going to go even higher. But we always want to wait for confirmation. Can everybody type in confirmation into the chat group? Confirmation. So how do you confirm that the price is going to go higher whenever you see this candle breaking the resistance line? Okay, the confirmation comes when you look at the next candle. Is it going to be a green one or is it going to be a red one? So can you imagine if this is a red candle? If this is a red candle over here, okay, then what is going to happen is there's a tendency that the thing will go all the way back down. If you zoom back the screen, you will be able to understand where I'm coming from. Okay, if there's a red candle, then the stock will come back to the selling all the way. It could go all the way back down. But right now, the price actually went up. So that is actually a good sign. Okay, that is actually a good sign that the market has broken the previous high. And when the market broke the previous high, okay, it will continue to go up higher. Okay, it will continue to go up higher. And you can see over here, there's another confirmation that this is actually a new, instead of the resistance line, this used to be a resistance. That means you can see it is resisting the candle from going higher. Right now, this particular line has turned from being a resistance line to become a support line. Support line. Can you just type in support? So it's just like bouncing a rubber ball right now, right? Okay, previously, this is like the ceiling. Every time the ball hit the ceiling, you come down. But right now, your ball has already moved from level 1. Now your ball is at level 2 already. So the ceiling previously, now become the level 2 floor. Okay, it becomes the level 2 floor. So when it becomes the floor, what happened? When the ball touches the floor, it bounces up. It bounces up. So right now you can see that it comes down, it touches the moving average line, and it starts to bounce up again. So you can see over here, right? You can see that right now the price is pretty resisted at somewhere around 165. So if you ask me again, wait for the same thing. If you see the candle going above this particular price 165, and then you see another green candle appearing, that is the time for you to do what? Can you just type it? Let me share with you based on what the candle looks like in case you cannot visualize. Imagine right now, you see a long candle over here, and make sure that this candle is green color. Okay, not enough, not enough. One candle not enough, and then you see another green candle over here. So this particular candle over here, okay, don't wait anymore, just go in. Okay, just go in, because after you see this, what happened is that the thing will go higher, right? So I know that a lot of people, especially when you first invested, right? Okay, we always believe that, the stock is so high, the stock is so high, the stock is so high. Okay, I just want to show you one example. Okay, this is Tesla. You all know this is Tesla. So at this particular point, let me share with you. Imagine last time, okay, when Tesla is still very, very cheap. Okay, let's say Tesla is now $198. It is at the all-time high. Okay, a lot of people will say that, wow, it is expensive, okay? And then what happened? It goes higher. Wow, so right now it goes to how much? I don't know. 100, 260, 280. People say, wow, siao, this one from $40 go to 280. Very expensive already. All-time high, right? Okay, and then what happens? It goes all the way to 300. And then still not enough, right? It goes all the way to 400. 400 people say this is already very expensive. It goes all the way to 500. Okay, not enough. Go to 600, 700, 800, 900. Okay, so right now it's here. But can you imagine? Okay, I want you to just answer me this very simple question. When you see a company like this that is going higher and higher and higher, right? Is it constantly breaking new high? Is it constantly at a new high? Yes or no? Yes, right. It is constantly breaking new high, right? So when a company keep breaking new high, is it a bad news or is it a good news? Good or bad? G for good, B for bad. It's actually a good news because the stock is going up and high. It's going higher and higher and higher. So the thing is, where is the limit? Okay, honestly, if you look at this particular chart, right, can you share with me where is the limit to how high Tesla can go? Honestly, when the stock is constantly breaking new high, the answer is, let me try to type in the answer because this one is a bit special. I must type in one. The answer is this. The sky is the limit. Is it possible that Tesla can go all the way to 1,000? The answer is yes, because it has never hit 1,000 before, but based on this, it can continue to go higher. Can it go to 1,200? Also possible. Can it go to 1,005? Also possible. All right. So when the market is at an all-time high, like I said, nobody say that 1,005 is the limit. Nobody is putting 2,000 is the limit. Nobody is putting 3,000 is the limit. As long as people are willing to buy, the price can continue to go higher. As compared to the company, let's look at one very quick company before we end off today. I'll just extend it for about 5 minutes. Okay, let me just look at let's look at for example, let's look at Alibaba. Okay, I think Alibaba should be a okay example to look at. Okay. Yep. So right now, okay, if you look at Alibaba, okay, because you can see that the stock is going up and down, up and down, up and down. So what happened is that, right, okay, you can see that right now, this is the highest point. This particular price point is the previous high, it's the previous high. So every time when the stock is at the previous high, right, like I said, it forms a strong selling pressure. Okay, it forms a strong selling pressure because why? There are a lot of people who bought somewhere around here. And these people right now, they are losing money. Okay, so when people are losing money, what happened? Fear overwhelmed them. So they'll be fearful. Oh, what if the stock drop? What if the stock drop further? And so when the stock goes back to this particular area, all right, what happened is that they tend to be more selling pressure. Okay, tend to be more selling pressure. And that is why sometimes you see a stock, you know, going in this particular direction. It goes up, it comes down, it goes up, it comes down, it goes up, it comes down. So when you see a stock like this particular pattern, can make money or not? The answer is yes, can make money lah. Why? Every time you hit the top, you buy a put lah. Okay, if you know how to short, you short lah, then you make money. If you then when it comes to the bottom, you long, then you make money. You short, then you make money. All right, that is when the stock is going sideways. Right. So, but when a stock is breaking new highs, so for example, now it break above. Okay, like I said, when it break above, what should you do? You need to look for the confirmation. And then when the confirmation happens, it basically means that the buyer is still strong. Okay, when the buyer is still strong, it means that the stock has the momentum to go higher. Then this is a good news, because why now for Alibaba, the sky is the limit. Like I said, you can go to 400, you can go to 450, you can go to 500. There is no this imaginary selling pressure over here. All right. And that is why when a stock keep going higher and higher and higher, you do not really want to go in and go and short the company, because the momentum can go on for quite a fair bit of time. Yes, it is overvalued, but how do you know whether it will reverse or not? You don't really know until it already reversed. Okay, and by the time it's a little bit too late. Yeah. So normally, yeah, like, it must come with a good volume lah. Okay, but usually good volume you can also see from the chart itself lah, how long the candle is. Okay, so a long candle is of course a good one, a strong buying candle. Right. Of course, there are many ways, like I said, for technical analysis to help you to analyze. But for today, let's focus on just the FA portion. Okay, FA portion. Anyway, I hope you guys have already gone through the spreadsheet. But what happened is that, okay, I believe that you all have realized by now is that most of the company over here are all 4-star company lah. Okay, why do I know? Because okay, all this company, I've already done the research. I've already gone through this afternoon to look at all the numbers, but pretty much I would say that these are all 4-star company. But like I said, having said that, it doesn't mean that right now you are good to enter all these company, because like I said, most of them are already overvalued. Pretty much all of them are overvalued. Okay, so for me, I believe that yes, they might still go higher, but I would actually enter based on technical analysis. Okay, based on trend. Okay, to enter. Right. So of course, for the TA side, in March we are going to launch a new how do I call it, a new session to share with you guys more about technical analysis. So do watch out for that particular series that is coming out in March. All right. And maybe before I go off, let me just share with you one final announcement before I go. Okay, just give me about 1 minute. I just need about 1 minute. I can't find my slide. Okay, yes, this is my slide. Okay, one final minute. All right, so just, okay, for those of you who are looking to explore more into options, okay, if you have not registered yet, I know a few weeks ago, some of you have already registered, but for those of you who have not, okay, I'm going to launch this 10x option secret webinar, and it's happening next week. Okay, it's happening next week. I think we have one on Tuesday and another one on, let me see, one options. On Tuesday, one on Saturday. Yes, option. Yes, that's right. So one on Tuesday and one on Saturday. So yeah, if you want to register, you can go to this particular link at bottom, bit.ly/10x with Bowen, and you can register. It's entirely free. All right, and of course, this is our new series as well. We just launched it a couple of, I think last week. It's called the UI Ghost Tip. So where can you watch it? If you have not watched it, go to our YouTube, Ultimate Investing. You will be able to watch it. So this is actually done by our coaches, Regina. Okay, very interesting on one of the company. Like I said, how do you know whether a company is good or not good? You need to deep dive, right? So this is the session whereby we actually deep dive and do all the homework for you. All right, with that comes to the end of my sharing for today, and I hope you guys have learned something. Okay, did y'all learn something? If you learned something, can you put in yes? If you never learn, put no. Okay, yep. So I'm glad that you guys have actually learned something. Okay, so most importantly, yeah, do continue to follow us on Telegram. I know that we are a little bit less active, okay, because of Chinese New Year. And of course, I've been going cycling quite a fair bit lah, so a bit more relaxed nowadays. So don't worry, we are coming out with a lot more content, okay, for you guys. And most importantly, is we want to actually focus on some of the good companies, and we want to deep dive further in. So that will be coming out in some of the series that's coming out. And of course, like I said, in March, we are coming out with a technical analysis session purely for you guys. So we tell you exactly what to look out for, whether is it a good time to enter, whether is it a good time to get out. So that is under the TA series. So do join us for that particular series as well. Okay, with that, that comes to the end of my session today. So thanks again, everyone, for joining me on Sunday night. Okay. I think I just want to once again wish you guys a happy new year, and very importantly, stay safe. Okay, invest safe, and I'll see you guys very, very soon in our next webinar, or in our 10x option webinar next coming Tuesday. All right, with that, thanks everyone, and see you guys. Bye bye.
吃了一口牙，血液都高升。一份祝福给疼爱你的人，也祝爸爸妈妈甜蜜过一生。听哟，噼里啪啦啪啦响的那个满春满街唱。来哟，七星海里赶走年少迎春生。爆竹一声大地震，噼里啪啦啪啦啪。爆竹一声大地震，噼里啪啦啪啦啪。听哟，噼里啪啦啪啦响的那个满春满街唱。来哟，七星海里赶走年少迎春生。爆竹一声大地震，噼里啪啦啪啦啪。爆竹一声大地震，噼里啪啦啪啦啪。爆竹一声大地震，噼里啪啦啪啦啪。爆竹一声大地震。